Should Powell resign? By now, you've undoubtedly heard from the administration. Trump has been calling him Mr. Too Late and other nasty names for a while. But now we've got mainstream folks outside of the office. And now it's Mohammed A. Alarian saying that Powell should resign. I'm going to go ahead and read this tweet because Anna hasn't seen it yet. And then we're going to talk about, should Powell resign? All right, here we go. Again, this is on X, Mohammed A. Alarian. This morning, U.S. government criticism of both Federal Reserve Chairman Powell and the institution itself has broadened to include mission creep and the effectiveness of other officials. The development of the last few days reinforce my view. If Chair Powell's objective is to safeguard the Fed's operational autonomy, which I deem is vital, then he should resign. I recognize this isn't the consensus view, which favors him staying until the end of his term in May, nor is it first and best, which is simply not attainable. Yet it is better than what is playing out now, growing and broadening threats to Fed independence, and will undoubtedly increase should he remain in office. Wow. What do you think of all that? Any thoughts of Powell should just come out and cry uncle and resign?
Yeah, one thing I'll say, I have followed Mohammed Alarian for a while, and I like some of what he says. He's a smart guy, but I also disagree with some of what he says because I do think he tends to be on the side of doom and gloom more than I like, in terms of always negative on the economy. Now, quite honestly, and those that have listened to us for a while, I mean, the reality is we've been in a very challenging economy for a couple of years. And so if you say that out loud, people think you're a doomer anyway. But he tends to take more of a pessimistic approach. And so, I recognize that. And with that, I think he also believes we should have cut rates a lot sooner. And I've been on record and you've been on record with saying, yes, we think they're quite behind in cutting rates. And, I forget the colloquialism that we say, but essentially like, the Fed's usually fighting the last battle that they fought. So the last policy mistake they made, they tend to want to overcorrect. And I think that the Fed, and I haven't heard Mohammed talk about this in the last several months, but I think he was on the side of they're too late. They should have cut rates, like inflation's down enough. They're too afraid to call it transitory and have it rear its ugly head again. So from that perspective, I've agreed with Mohammed Alarian that the Fed is late. They should have cut rates. However, recently, I thought the Fed was making a mistake, but I'm not so sure that they have when it comes to the tariff threat and its risk to inflation. And we talked a little bit about it last week. Inflation did start to tick up after the last meeting and everybody thought, oh, it's down. And then all of a sudden it ticked back up and we could dig under the hood there a little bit. But the reality is tariffs are a threat when there isn't certainty behind what they're going to look like. And so, the Fed has basically said, listen, we would have cut rates had the Trump administration not come out and said, we're going to, threaten anywhere from 30 to 50% tariffs, really more of a retaliatory tax than a true tariff. And so that shock to the system made the Fed, I think wisely in this case, say, you know what? The tariffs, if they're as bad as they say that they will, that could cause significant inflation for the part of the country that is still spending, that does have excess. And that could make inflation more embedded and stuck there where it's not going to come down. And I think that became a big risk to them when the economy, even though it has been softening, and we've talked about recession-like conditions and rolling type recessions over the last couple of years, and these real recessionary warnings, even at the conference board and the leading economic indicators saying, hey, we're about to go into recession probably, and employment could go way high. I think that risk is there, and therefore they should cut. But yet the tariff risk and the uncertainty behind how bad will it be and who will absorb those costs. Will companies be able to absorb the profit losses, or will the consumer, basically absorb them and inflation be higher? So I don't think Powell should resign. I think generally, while I've disagreed that they held on too long, and I think that they are holding rates restrictive for too long, It's not just Powell. We have to understand it's an entire committee of Fed governors, presidents of different regional banks that are looking at all of this data and together voting. So if it were just one man, maybe you could say, hey, he should resign. There's too much risk to the downside. Tariffs are not inflationary. But I think if you try to look at it without bias and without political bias, and whether you like or don't like tariffs and whether you believe the economy's strong or not, I think at this point, the balance of the risk, they might be wise to hold on until we start to see the aggregate economy really start to take it on the chin. We have had advanced warning signs, what we call leading economic indicators, and maybe we can dig into this a little bit for the new data on that are turning negative and showing that as economic cycles, turn, they start with the leading economy and then they turn to the cyclical areas like manufacturing and real estate. And then they turn into the coincident indicators, the real time, are we in a recession or not? And a lot of that data has been soft and is continuing to soften, showing the economy is weakening and it might become recessionary. And so if Powell holds on too long and tariffs don't prove to be inflationary, I think we'll look back in history and say they should have still cut rates. Otherwise, it could put us in a deep recession. So time will tell. But I think it's a little overblown to say he should be fired or resign when it's an entire committee of people who are saying, if the administration hadn't done what they did with these tariffs, we would have cut and things might be a little less uncertain and volatile.
Yeah, it's really interesting for me to hear Mohammed kind of put this out there, kind of say the quiet part out loud.
Yeah.
And if I step back and I kind of challenge his thinking, he's basically saying, in my opinion, Powell is trying to maintain the Fed independence, right? Generally speaking, most economists believe the Fed being independent is a good thing, not a bad thing.
Yes.
Right. You don't want influence from the executive branch because executive branch always wants lower rates. I mean, it's how the game works, right?
They get lower rates. They spend less money on interest on our debt. They don't have to pay a whole lot in US treasuries and they can continue to spend on whatever projects they want, right?
Yeah, that in the economy generally gets, in money supply increases, the economy revs up, the downside obviously being inflation. That's why the Fed being independent is so important.
Right.
When I look at, again, what they're all saying is it really does feel like July is no cut, which is going to, piss off the administration and just up the pressure. But it really looks like 6 weeks or whatever it is after that, September is looking more and more likely like they're going to do that first cut. That's kind of what the data looks now. And the other thing I think is really interesting is I think the Fed has made it painfully clear which of their dual mandate they care about most, labor or inflation. And near as I can tell, labor wins, right? Labor over inflation. And, if you look at the unemployment rate, it's actually gone down. It was 4.3, I think 2 months ago. Now it's 4.1. We can argue the facts about the data being dirty and participation rate and all of that. But, 4.1, that's near record lows. So it's going to be interesting. But back to Powell resigning, I don't know how him resigning, basically crying uncle, allows the Fed to maintain its, independence, whether you think it has it or not. Because that would just
the opposite to me. It seems
like,
okay, I'm caving to political pressure, so therefore we're not independent. And that's the last thing that he wants to be accused of doing and the last legacy that he wants to leave. So it's like, I understand that LRN doesn't like it, but to say that resigning gives them more independence, I think it would do the opposite.
Absolutely.
And I think it would really spook both the stock and the bond markets and make things even more uncertain than at least having a general consensus that, okay, things are relatively healthy at the aggregate of the economy. The aggregate number of employment is relatively okay. GDP is relatively okay. Inflation is relatively okay. I think that if you have more volatility thrown into the other risks that we already have, I think that is worse for the economy. I think it's worse for the markets. And one of the things that a lot of people don't know, and it's worth exploring a little bit if you haven't looked into it. But when we come back to these leading economic indicators, Powell and the Fed are not just looking at the real time. It's what they tell us about. They say currently the economy and unemployment are relatively healthy. Currently, inflation is coming down relatively well. And basically the balance of risk is currently about the same, meaning they're not great, but they're not terrible. They're both kind of okay. And therefore we can sit tight and see which risk rears its ugly head worse and fastest, and then react accordingly in real time. But if you look at leading economic indicators, and the Fed does, they're basically 10 indicators that turn south before the economy starts to soften and go into a recession. And they are watching that very carefully. But one of the big leading economic indicators, and we can argue whether it should still be or not, is the stock market. And so right now, essentially the leading economic indicators have turned negative pretty precipitously in the last 3 months, to the point that it's signaling once again the third recession warning since 2022. And so Powell isn't just looking at real time, even though it's what they want to say, why they can wait because it's currently not so bad. They're watching the underlying economy start to get worse, but the stock market has been so high that when they take those 10 measures and they kind of weight them, and then they come up with a number, what's the score of where the LEIs are, the market being high has what's kept it positive, and not all measures turning negative to where we do go into current real-time coincident indicators of recession. So if you spook the markets, Michael, by doing something like we're firing the Fed chair and now, oh my gosh, where are rates going to go? What's going to happen? What might happen is they're worried about inflation ticking back, because they know that they're going to, if Powell is an independent and he's out, and Trump puts in a guy that's going to drastically cut rates, the bond market's going to worry about inflation. The stock market's going to worry about inflation. You might see treasury rates go up again. It creates more volatility. And if that creates a market correction, the LEIs are going to go in real time, and it could put us into a recession, which is what everyone wants to avoid. And we're already kind of have some risks there. So I think it would be really horrible for Powell to resign at this point, because of the impact that it's going to have on the question about what to expect. And the markets are all driven by what are our expectations. And if our expectations don't play out as we foresee, then things could be really bad, and they start to pull money. So I want to see Powell stay. I want to see, I'd like to see lower rates. I agree with some of the, Waller came out. He's one of the Fed governors that came out and said, hey, I'm arguing to the committee, we need a rate cut. And there are a few on the committee that believe we do. We feel like we're too tight. Things are softening underneath the economy, the LEIs, the beige book. And I'm afraid that if we hold too long, then, we can have a real problem on our hands. So I think there's enough breadth on the committee this time where you have dissenting voices. Where in the past, Michael, if you go and you study Fed history, back in the Greenspan era, it's like if you came out against what the chair said and you voted differently, it was like sacrilege, right? But there are Fed governors right now that are voting differently than others. But at the whole, the collective majority of the Fed governors on the FOMC have been voting to hold steady. But you're starting to see more and more of those voices come out and say, okay, I think we're too restrictive too long. And we could get a surprise rate cut if those like Waller, make their case in July and surprise the markets and say, okay, we're gonna cut 25 basis points. So I think we just need to wait, and we need to let that play through, and not blame one guy because of our political bent or our desires as investors to see rates cut faster.
Yeah, when I think about Powell resigning or being fired, it's all the same to me, right? If he's out before his term ends, I think you really have to say, be careful what you wish for, because I think you're going to get exactly the opposite. I think the 10-year is going to go higher, the 30-year is going to go higher. In fact, Deutsche Bank this morning said even the 30-year mortgage or the 30-year note will go up 0.5% on a Powell exit. So again, all borrowing costs will go up. The bond vigilantes will not be happy. and you will get exactly the opposite of what you're hoping for.
Yep.
You may get the short end down, but the back end that is really where we borrow the mortgages and all of that, it will go higher and perhaps a lot higher. So I think Powell resigning would be very, very expensive. And to your point, I think it would be the thing that sends the economy into a nasty recession. If you yank borrowing costs up 100 basis points or 150 basis points, no bueno, not good, not good.
Yeah. Absolutely. And again, it's 7 out of 10 leading economic indicators that are currently negative. Only 3 are positive, being the stock market being the biggest one. And then the next part is manufacturing and construction, real estate construction. And guess where they're heading? They're heading in that downward motion. So I think that we're going to get, maybe the recession call at some point, and that's going to cause them to cut rates. I think that they're going to probably maybe cut, maybe 30%, 40% chance they cut in July. But otherwise,
wow. You think 30% chance in July?
Up to.
Oh,
I think it's probably not going to happen, but I'm just saying, I think there's enough, listening to Waller and others speak, I think there's enough that they might be able to convince them with the most recent, on the 21st, I guess that was yesterday, the new LEIs came out, warning of recession. And so I think there could be enough that they say, okay, let's get ahead of this forward data. Last week when Powell spoke, he said, yes, we're looking backwards and we're looking at real time, but we also have to look forward. And so we're looking forward at what could be the impact of the tariffs. We're looking at forward with what could be the softening of employment. And so we're going to remain data dependent. And so I think there's a chance they're talking more about forward guidance, not forward guidance, but looking forward, which was nice to hear Powell say that, Michael, because they keep saying, we're data dependent and this is real time. And I'm like, you're missing the boat of what the LEIs tell you are coming. And for the first time in a while, I heard him actually say, we have to look at the data, but we're forward. We're trying to be forward thinking and see where things can go. And so I think that was a minor shift in his tone that tells me maybe they really are looking at the LEIs now, and maybe they've turned negative enough that they would surprise us. Maybe 20 to 30% chance that could happen. I'm still leaning towards September. But something interesting, and I don't know I don't remember what senator it was, but I saw yesterday morning a Republican senator put Powell up before Senate to say they want to fire him based on perjury and up to 5 years of jail time on calling, several $100 million of renovations to the Fed building minor when they considered them major. And so it'll be interesting to see if that actually proceeds. It would be very political, for sure. But if they actually fire him, I think we need to look out below for what might happen.
Yeah, be careful what you wish for. I think most people who are on the camp of removing Powell, either via resignation or firing, want to do that because they believe the next person will lower rates. And again, at least in the short term, short term being 3 to 6 months, you are not going to get what you want. That back end of that curve is going to rip higher.
Absolutely. We're on the same page.
Yeah. Anna, where can people find you?
Great. You can find me here on your show. You can find me on social media at Anna Kelly, REI Mom. And if you are interested in real estate wealth coaching and consulting, you can book a time with me on my website at AnnaKellyInvesting.com.
Thank you so much.